Hello and welcome to an update on the DXY, the US dollar index. We can currently see that the price is still holding below our Fibonacci resistance area. I believe we talked about it only in the last video. This resistance area between $99.67 and $100.70, $100.70. So the overall idea is that the pressure is downward, especially here against this zone. So downward pressure remains high. One more low is still preferred, but I have to say it is at least based on the nanostructure and based on the, let's say, the structure there from the last swing low here, at least probable, at least worth considering, at least worth considering that we might have put some kind of at least a local low in place. So this is something I would at least keep in mind, but there is a very, very clear level that must hold to keep this yellow scenario alive, which means one more high in a wider corrective bounce, you could say, before we form that one more low. So overall, I am looking for lower. The question is just, do we do it in a very direct fashion and we reach that blue box directly in like a wave 5 of wave 5 to complete the larger decline that started here in January, which is actually part of an even larger correction that started a couple of years ago? Or do we form a larger fourth wave first? So the fourth wave did not complete on the 12th of May, as highlighted in white, but actually it's forming a wider wave 4 in an ABC structure in which we are, currently moving up in this C wave. We've just started the C wave. Both plausible, but bear in mind that also in the yellow scenario, once this has topped, I would expect another low. So that's my view. I mean, of course, a more substantial low could have formed already. There's just nothing in the chart that would suggest that at this point to me. That being said, most of that correction is likely done, And obviously, the closer we get to completion, the higher the probability overall that the next rally starts, which we discussed in previous videos. I mean, look, this is already correction started in 2022, ABC, and that's what a correction is. It's an ABC structure. It's just that in the C wave decline, we might, get a few more downside squiggles. That's the idea. But then when we zoom in, there is nothing that at the moment tells me the correction has completed or is completed. So I think it's important to be aware of that context, that technically at any point we could get that turnaround. But in the short term, one more low is still preferred. And we just need to understand the two potentials here on the shorter time frame, which are currently in the focus, and understand the key levels. So the yellow scenario, in which we might get another rally into resistance between $102.30 and $103.69, that is a valid and plausible scenario as long as we are holding above the last swing low that formed at $98.70. We would like to see a break above the last high at $100.53 to confirm this scenario further. And it is important that if we get any break below that $98.70 level, then we're likely going for that one more low directly. I kind of preferred this direct downside move, but that move up looks like a micro 5-wave move up. Not very clear signals because the move down is also quite sharp, so it literally depends on whether the bulls can defend this swing low that formed on the 26th of May. But in both counts, one more low is currently preferred. That's the update on the DXY. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in additional updates, make sure you stay in touch, subscribe to the channel. Thanks so much. Bye-bye.